I think the reason why markets have stalled over the last couple of months is because we haven't had the news from the corporate sector. And it's been all about politics and geopolitical headlines. People are going to look and see we're going to be growing earnings at 20+% again. And unlike the beginning of the year, valuations are now fair. They're not expensive. So I think that this is going to get investors excited to take money back into stocks.
So the Santoli pause, which was predicted and exactly described before it happened by Mike Santoli
3 weeks ago. not a major pause.
But it has given. When things consolidate, you do see sometimes the E comes up and the PE becomes less stretched.
That's right. And I think the bar's been lowered a little bit. The fact that we have taken our foot off the gas like we saw in January, now that means that there is some room for upside. This isn't all priced in, and I think that that's going to be good for markets over the next couple of weeks.
Seth, in your latest comments, you were in a really good mood, I thought, for you. And I could have sworn last time you were here, your main concern was that we were running too hot and that we had put too much stimulus on the fire for the economy. That was going to bring the Fed in faster than you would have liked, and it was going to be a problem. Reading what you said about Friday, you loved that report on Friday.
So we thought the jobs report was solid. We missed our forecast by a whole 1,000 jobs.
Yeah,
so
you were close to that.
On.
But are you disappointed with the lack of wage growth seemed to allay your fears that we're running too hot, I think.
So I think the lack of wage growth is only one part of the story. We still see, well over 200,000 jobs a month. That's been our forecast. It's going to continue to be our forecast. That's still going to continue to put upward pressure on price inflation. Wage inflation could be rising faster. That's a little bit of a puzzle there. There are a few different explanations we could think about. But broadly, we have a rapidly growing economy. We think the jobs report was consistent with that view of a rapidly growing economy, and the Fed's just going to keep hiking because they're going to want to try to slow that down so that it doesn't overheat, doesn't get beyond the point where they think they can control it.
We have goals beyond later. Did you read his notes? He is so miserable about what's happening right now in terms of, I don't know, the tax reform's going to the wrong place. Is there a way to be really unhappy with the current economic environment we're in, whether it's GDP, unemployment, or any of inflation? Are any of these metrics not on at least above average in terms of being positive, aren't
Yeah, I mean, there's no question that the economy is strong. It is very, very strong. And I think to the extent that anyone wants to be negative about it is that it's perhaps too strong in the sense that it's not sustainable. Okay. No, exactly. But I mean, that's the worry. This is what, if you listen to any chair of the Fed, past or present, they'll say if you grow faster than is sustainable in the long run, you're going to eventually get to an inflation. And if you wait till that happens, then they have to tighten so much it causes the recession.
What is your I've seen numbers up in the 5s now for this quarter. Is that possible? It was because of soybeans. Because of soybeans. It really is.
Yeah, no, there's a really, really big shipment. Some people speculate whether it's to try to get ahead of the sanctions from China.
Right.
So we've got a 4 handle on our forecast for this quarter.
Yeah.
You know as well as I do that GDP numbers get revised all the time.
Right.
If the question is a 5 possible? Sure, it's possible. That's not our forecast.
That would skew the year though up to probably 3 though, which people say we can't sustain. Are you absolutely certain there's going to be a slowdown after this quarter or after this year?
Absolutely certain. Forecasting is hard, especially about the future.
We've
got 3.1 written down for this year on a Q4 to Q4 basis. Exactly.
Your peers don't yet.
I don't think they do. I think we're probably a little bit on the upbeat, optimistic side.
You're really coming around. You've been watching the show. You've been watching Squawk.
It's been getting better once you've had the chief economist from UBS on.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.